Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for an impulsive structure to the upside where preferably the low of your wave 4 is in and we are looking for a wave 5 to the upside. The invalidation for this scenario is price moving to the downside, hitting the high of this wave 1 at 65.5k, as in an impulse you don't want to see overlap between a wave 1 and a wave 4. If you do get overlap and price moves towards the downside, then the alternative bullish scenario is a double 1-2, where the target for your second wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of the blue 1, giving you a target between 66k and 62.6k. The second wave 1, however, is a lot longer in price and in time compared to your higher degree wave 1 in green, as in green we have a wave 1, 2, 3, 4, 5, and inside the green wave 3 we have the blue count 1, 2, 3, 4, 5, which is a sub-degree count of that green wave 3. Preferably, therefore, your second wave 1 is shorter in time and price. So if price does move towards the downside and invalidate the impulse scenario 1, 2, 3, 4, 5, the double 1-2 also doesn't have the greatest probability, but it is the best alternative that we have. If we then go to the local time frame, then on the lower time frame we're also looking for a double 1-2. Here we have a finished wave 1 in blue, a finished wave 2, and then look for another 1-2 towards the upside, where the common target for 2 is the golden pocket to the 786, taken from the low to the high of wave 1, giving you a target between 69.2k and 68.7k, with the 886 being a very rare target for 2, so preferably you're not hitting that level, and the invalidation is moving below the lows here. On the 15-minute time frame, preferably price then moves up to On the 15-minute time frame, price then preferably moves towards the upside and hits the 0.618 that I have on my chart over here at 69.6k, as that would invalidate a wave 4. If we look at the volume of this move towards the downside, you can see that this has been a very impulsive move on a high amount of volume, and in a impulsive structure, preferably this is your wave 3, you're then looking for a wave 4 and at least another low over here on a lower volume for a wave 5. If price moves towards the upside and hits the 0.618 that I've taken from this high to the low over here, it lowers the probabilities for an impulse to the downside, increases the probabilities that this over here was an ABC to the downside, and we're looking for price to continue to the upside. If you want to be a bit more safe, you can also take the 0.618 from a higher pivot. So in other words, if we then move towards 69.8k, it would increase the probabilities even more that this is a three-wave structure, as long as you at least don't take this low over here before then moving towards the upside. If we go to the bearish scenario on the daily time frame, we have a zigzag ABC, after which we then expect continuation to the upside with a leading diagonal A, zigzag B, looking for a 5-wave C towards the downside. The problem for this wave C is that you want to count impulsive structures to the downside, and this move to the downside looks very much like a 3-wave structure in a double zigzag WXY, which means this can then only be the start of a bigger diagonal to the downside in a wave 1, 2, 3, 4, 5, but it is way too early to start talking about diagonals as long as your wave 4 isn't even in. So that lowers the probabilities for that ABC scenario at the moment, while your other bearish scenario is a WXY double combo, after which you expect continuation to the upside, where your wave X is finished and you look for a wave Y. Inside wave Y, you can have either a flat structure ABC, a zigzag 535, or a triangle. Based on the lower time frame count, a flat would fit the best, as this move towards the downside counts best as a WXY, which you can also label as a wave A. However, a 3-wave A means that you're going to be looking for a 3-wave B for a flat and a 5-wave C towards the downside, and the most common flat is an expanding flat where you want to see this high taken at 72k. a minimum target for a flat is the 0.9 Fibonacci, which is currently sitting at about 71.4k. So even in that bearish scenario for a WXY looking for a wave Y, preferably price would first move towards the upside and hits 71.4k. On the lower time frame, we are then looking for a double zigzag to the upside in a WXY. So I have a wave A to the downside, double zigzag as well, WXY, and then to the upside we're counting an A, B, C, and W, corrective structure in a wave X, and then a move to the upside in a wave Y. Now possibly your wave Y could be finished over here, even though preferably, of course, wave Y moves a little bit higher to at least 71.4k to hit the minimum wave B target. And that would then mean that in wave Y we're looking for an A, B, C towards the upside. Now this wave X might possibly not yet be finished, but in that case we're looking for a wave A, wave B, and then a wave C flat structure. Wave B, however, did hit the 1.618 Fibonacci taken from the high to the low of wave A, which is a very uncommon target for a wave B, which does reduce the probabilities for a wave A, B, and a wave C. So if you do move below the lows over here, it is a higher probability that price might possibly continue to new lows instead of finding support. Looking at the CVD divergences, well, price moved towards the downside and CVD moved to the downside as well, so there's not too much going on. If we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the move down from 72k counts best as a WXY double zigzag, which increases the probabilities to take out this high sooner or later. If price hits 69.8k, it increases the probabilities to move above the high here of 70.6k sooner or later. And if price moves towards the downside, taking out these lows, invalidating a double 1-2, then it does increase the probabilities to move to further downside, as long as we then do not see any signs of support, because the only rescue would be a potential flat ABC, and that means we need support here. But without support, we're gunning for the lows. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.